market is still holding up okay. So let's welcome on board the management of Neogen Chemicals to try to get a sense as to what's happening in this space, because it's been one space which has been very, very active. Mr. Kanani, the MD at Neogen Chemicals, is with us on the show. Hi, thanks so much for making time and speaking with us. Well, to begin with, help us understand what are the demand factors looking like on the ground right now in terms of the client conversations. What are the latest trends telling you?
Hi, thanks for having me here. When we are talking of chemicals, Neogen is basically operating in segments where we make specialty bromine-based compounds and advanced intermediates. These are basically going into pharma and agro customers. And we also have started working on CSM business, which is for innovators and doing contract manufacturing for them. And recently we acquired an organolithium plant. So this is something which is a traditional Neogen business, which we've been doing, at least the bromine derivatives and advanced intermediate for pharma. This is a sector in which we've been operating for last 30 years. So what we are seeing is, like we have seen like low demand in last 2 quarters in agro and pharma. So this was already it was decreasing over last 4 quarters. And in second and third quarter, we have seen the trend kind of continue. However, we are hoping that pharma customers will at least slowly start recovering in the next quarter, and also some of our agro customers also have indicated that their inventory correction should happen, and depending on products, now they will start placing more demands for next year. Further, one of the key thing for us was that we had just completed our investment into the Dahej site, and with the acquisition of Neogen Chemicals, we had also option of combining. We had some synergies between the two. So with this message, when we went to agro innovators companies, we have seen a very positive response from them and a lot of interest in Neogen's capabilities in agro in the Europe and the Japan market. So we are hoping to build on this, work with these customers in 2024 to basically find more larger scale projects, which will basically drive Neogen's growth. Finally, 2 other segments on the lithium side. So we have a non-battery segment, and this is a segment in which lithium prices have been correcting significantly. So they had gone to their historical high last year. Now they are coming back to what was normal price. So we don't know how long this will be sustained, but at least the softer demand in some of the lithium EV markets, especially in China, has basically driven this. But for us, it's a welcome change, so that the lithium prices have come down normal. So that impacts a little bit on our top line side. But demand-wise, it is remaining, demand side still is good and is improving, because now that most of the customers feel the price correction has happened, so they are now keen to start placing orders for covering at what we consider is a relatively low price for next 2-3 years on the non-battery lithium segment. And where we've seen strongest interest in Neogen's capabilities is on the battery lithium.
Right.
So we have already started supplying small quantities of electrolyte and electrolyte salts, and both domestic and internationally, we are seeing a lot of interest from customers.
Harin, I was actually wanting to talk to you more about that, because one is your legacy business and one is your future business. I remember when we the story of your tie-up with Mitsubishi 1 year back for doing a joint big capex in the direction of battery chemicals. I want to understand what is the status. How much is battery chemical part of your overall business right now, and in future, say next 2 to 3 years, are you on track? What kind of breakup are you talking about? Because this is also a de-risking strategy, and plus going towards a sunrise space within chemicals.
That's right. Yeah, so as on today, the battery revenue is almost nothing, zero. So we started all the battery business under Neogen Ionics Limited, which is a wholly owned subsidiary. The subsidiary was established in just April this year. And the first plant which we were building for battery lithium salts is just coming online in current quarter, and it will start contributing to us from next quarter onwards. However, this is a smaller size, which maybe has an overall potential of around 100 to 150 crore of revenue potential with whatever we are currently investing. But going down the line, the bigger capacity which we are making ready, which we are going to do at a greenfield site, so that which, as you mentioned, with Mitsubishi, it's a manufacturing license from Mitsubishi, and that facility is on track to come online sometime in second or third quarter of calendar year 2025. So that is on track. Our work with Mitsubishi has been going well. We are like almost finishing the design. We are also finalizing the greenfield site land. So very soon, both these will be finalized, and the construction should start sometime in 2024 calendar year, first or second quarter. So that's on track. We are
Right.
on top of that. That is for the electrolyte for domestic market. But what we have seen in last 6 months, a tremendous demand for our lithium salts and additives, which was Neogen making with its own technology in like Europe and Japan and US market, because they want to decouple from China. And especially in US, there is a IRA law which requires this decoupling if they want a subsidy. So we are seeing a very, very strong demand from them on that front.
Sure. So a lot of these things are sounding very positive, Mr. Kanani, but I wanted to break down everything together into numbers as well. So
Sure,
for
sorry.
FY24, you were talking about a 750 crore kind of top line. A, is that
Yeah.
intact? And what about the next year? Because we're already towards the end of FY24. Next year, could you continue this growth in terms of volume and price? What could be the breakup?
So, because lithium prices have like significantly reduced, right? So we are basically looking a number more closer to 700 for the current financial year. So both the lithium prices and softer demand on the pharma agro has driven this. But last year our numbers were 680 crore, and was 70, 80 crores was just higher lithium price. So still in current market, we expect to go from 600 to at least 700 crore plus. And next year also growth will continue. Of course, most of this is non-battery, and I think previous question was how much battery materials can contribute. So our estimate is that with the revised numbers that we have shared, this would be somewhere. So our regular business in next 2 to 3 years will reach around 1,000 crores, but the battery business itself can be, let's say, 1,000 crore plus revenue contributor in next 3 years time. And the capacity which we are putting in place, so we have now increased the capacity to 30,000 ton of electrolyte and around 4,000 ton of salts. So with that increased capacity, it could be the capacity on full utilization can give you even more than 2,000 crores kind of a revenue potential. This is just the battery itself, and the regular business will have its own growth trajectory. First reaching, let's say, 1,000 crore if market improves in next 1 or 2 financial years, and then we will continue capex and further growth on that.
Okay. All right. Thanks very much for joining us, and good luck with those plans. The street is watching out for your execution very closely.